Hi there, good afternoon. You tune into ET now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Good afternoon to you, Vinny, but not a great afternoon coming in for the Indian markets. Also, likewise for the Asian markets as well. We've seen a sharp cut come in on Hang Seng Index, Shanghai, and the rest of the Asia, and we are also moving in tandem with those moves. 0.7% downtick, as you can see on your screen for Nifty. At one point in time, we did slip below that 18,500 mark as well. Let's take a look at what the broader markets are doing, because that was one part of the market that was holding on to positive gains through the course of the day. Now this one also has inched into the negative territory. Small cap still holding on to positive territory, though 0.2% uptick coming in for small cap index, bucking overall market weakness. Nifty Bank, that's the one that's underperforming the benchmarks. Over 1% downtick coming in for the Nifty Bank. And talking about the rest of the other sectoral indices, energy sector is the top sectoral loser, followed by metal, PSU Bank, FMCG as well. But as the defenses, they're still holding on to some sort of gains. You have Pharma Index, that's the top sectoral gainer, followed by IT Index. So that's the way how the market setup is looking like, Vinny. 2 hours left to go for the trading session, but yes, a weak outlook coming in for the benchmarks.
Okay, let's move on and get started with all those stocks that are buzzing in trade, either on the back of news flows or on technicals. On the technicals, we have Sumeet Mulchhandani joining in with us, while from the research team, we have Harsh as well as Ashisha joining in with us. A very good afternoon to all three of y'all, and I'm going to be starting with the first stock that has been focused today, and we're going to talk about Indo Count Industries. This one is in focus on the back of its numbers. When you look at it, the revenues have seen a sharp uptick coming in, 24% growth on a year-on-year basis. Revenue stood at 807 crores for the company. Even in terms of the profit, a 10% uptick there, and margins, that's seen an improvement of around more than 300 basis point. EBITDA margin at 17.9% versus 14.6%. A good set of numbers that has come in from the company, and operating performance was quite strong for the company as well. That is the main reason that we're seeing today. The stock has been gaining in trade and up with gains of almost 11% as of now as well, Cheryl.
All right, moving on then, Sumit, Indo Count, that one featuring on your list as well. How are the charts looking to you after this run-up? Do you think more scope of a uptick coming in on that one?
Yes, hi, good afternoon to all. So, yes, it is on the top of my list today, you can say. Last month, the stock has given a consolidation breakout almost after a 6-month period. So, today the stock is up by 10 to 12%, and still it is looking good. So, one can accumulate the dips also till the level of 150 and keep a stop loss of 150. We are expecting a round bottom recovery till the high of till the previous high. Previous high was nearby 300. So one can expect a target of 240 and 310 in the next 3 to 6 month period.
Right, moving on, let's talk about Mankind Pharma. This one came out with its earnings yesterday post-market hours, and if you look at the revenues, you've seen an uptick of about 19% on a year-on-year basis, coming in at around 2,053 crore rupees. If you look at the profit, that one also saw a significant uptick of about 52% at about 294, while even the EBITDA performance also was good. So you had the EBITDA margins that saw an uptick of about 380 basis points, coming in at around 20.3%. The stock did start on a very firm footing, but from there on, giving up all of those gains. Remember, the market setup also is pretty weak. Right now, it's trading with cuts of about 0.7% as we speak.
Okay, let's move on and talk about Coal India, Ashisha. Not an earnings candidate. What's the update on this one then?
Earnings candidate, they went ahead and hiked prices for the first time in the last 5.5 years. They've hiked prices by about 8% for some non-coking coal grade. They've hiked prices by about 8%. This translates to about 2,700 crores of revenue in FY24. Remember, the company had undertaken wage hike earlier this year, which means their expenses were to rise by about 6,000 crores. And now that the company has undertaken price hike, it will partially compensate the impact of higher wage that the company was to face in FY24. However, analysts do believe that we might not see such kind of price hike in the near term. As far as e-auction premiums are concerned, they are off from their recent high, but e-auction volumes continue to be on the higher side, and analysts believe that this is a positive for the stock. We have a couple of brokerage notes that have come in on the price hike that the company has undertaken. Motilal Oswal says that they believe Coal India is well placed to capitalize on the growth opportunity going forward, while Nuvama believes that this price hike was much anticipated, especially after the 9% wage hike that the company undertook earlier this year. Positive news, the stock is not reacting much, holding on with cuts of over 1%.
All right, moving on. Harsh, let's talk about Himatsingka side. This one is in news on back of its earnings.
Well, yes, Cheryl, absolutely. Looking at revenue, which is actually shrunk on a year-on-year basis. So it's in fact down 11% year-on-year. It's come in at roughly 692 crore. Let's look at EBITDA, though. EBITDA is actually up 12.5% year-on-year, 6.5% sequentially. So a positive coming in over there in terms of margins. It's come in at 124 crore, more than what it was last year as well as last quarter, despite the drop on the top line front. You're looking at EBITDA margins, therefore, which have gone up, and let me take you through it over the last year or so. 14.5% was where EBITDA margins was Q4 FY22. It went to 15.5% in Q3 FY23 and currently sits at 18%. So that strong, robust increase in terms of EBITDA margins has really pushed the stock price higher in trade today. It's up 7.7+% in trade. Let's look at profit after tax, though. Profit after tax has more than doubled on a year-on-year basis from that 8 crore mark all the way to 22 crore. So on the back of that, the stock is up and buzzing.
Okay. Let's move on to the next one on the charts, and Aurobindo Pharma. Sumit, this one has hit a 52-week high today. What should we be expecting from Aurobindo Pharma going forward in terms of targets that we should keep an eye out on? Do you think it will actually see a further run-up or maybe some bit of a consolidation?
Still it is looking good from the levels of the 400 till the 660. It has given a good bounce back, and might be some consolidation, but it will be an opportunity to buy in dips. So we will suggest to accumulate all the dips till the level of 590 to 600 rupees. If already anybody is holding, can hold with the trailing stop loss of 590. In the upcoming sessions, we are expecting the target of 740 and 810. So time period might be 2 to 4 months.
Okay, let's move on and talk about Allcargo Logistics. This one is in focus after we've seen a weak set of numbers reported by the company. The stock fell as much as 5% in trade today as well. Revenues were down by 38% for the company. Other than that, when you look at it in terms of the weak freight rates, it's something that impacted the overall earnings performance as well. In terms of the operating profits or EBITDA, as we know it as, that has also fallen by 63% on a year-on-year basis. Margins narrowed down to just merely 4.2% from 7.1% last year. Also, the net profits that fell by 75% as well at 51 crores from 221 crores last year. A decrease in the freight rate is something that impacted the overall numbers, with the ocean freight index down 77% from a year ago and ocean freight yield also down 30%. The company also said that the volumes continue to remain low in the flagship international supply chain business due to the reduced global trade. Most leading international forwarders have reported a 5 to 7% year-on-year drop in terms of volumes in the quarter ended March as well. This is what was highlighted by the company in their press release as well. On the other hand, when we look at the express distribution business for the company, that has increased by 10% as well. But all in all, overall weak set of numbers, volumes looked a bit subdued as well. Recovered from those lows of 5% but still down 3% in trade as of now.
All right, moving on, let's talk about Tega Industries, and that one hit a record high levels in this after a good set of numbers coming in for the counter. If you look at the stock at one point in time, it had gained as much as 10%. That's where it is right now. Hit a record high of 899.45 rupees per share. The stock has posted its biggest intraday percentage jump since December 5th. The company reported approximately 58% rise in their Q4 profits, while the revenue from operations saw an uptick of approximately 37%. Remember, the stock is gaining for a third consecutive session, pushed at a record high, and that's Tega Industries for you.
Let's move on and talk about Narayana Hrudayalaya. Sumit, this one on the charts, this one too is sitting pretty at its 52-week high. So currently at those 890 levels, 882, 890 levels, is it an attractive buy still?
Yes, stock is trading on its lifetime high, but still it is looking good to hold. If already anybody is holding, we would just advise to 2 weeks prior also it made a gap up and with the open high. So still it is looking good for the target of 1040. Any dips can be accumulated and one can keep a trailing stop loss of 750 here.
Okay, moving on then. Ashesha, let's talk about Sona BLW or Sona Comstar. Why is this one in focus?
Two factors. One, of course, is the big block deal that took place this morning. Promoters have likely sold about 1.9 crore shares in the company, which translates to about 3.25% stake of the total paid up share capital. We believe from reports that floor price was fixed at 500 rupees per share, which is a discount of about 7% to yesterday's closing price. Aurus Investment Promoter Group is likely to have sold stake. Remember, as on March end, they had about 33% stake, and now with this block deal, their stake would have come down to about 29.75%. Apart from this, of course, we have this MSCI adjustment also taking place, but block deal weighing more on the stock sitting in with a cut of over 5%.
Moving on to stock number 11, and Harsh, Lemon Tree is the stock that you've picked out for us today. What is the reason for this one?
Well, yes, the stock's up and buzzing. What we're seeing is revenue, which is seeing an uptick both sequentially as well as on a year-on-year basis. In fact, I stand corrected. Stock's actually fallen after that sharp uptick early off in trade. Let me quickly take you through the numbers, though. You're looking at revenue at around 253 crore versus the 233 crore number in Q3, which is an 8% uptick sequentially and a 40+% uptick on a year-on-year basis. What we are seeing in EBITDA is very similar, 50% uptick on a year-on-year basis and a solid 35% uptick even sequentially. So we're seeing a strong sequential uptick even in terms of EBITDA. You're looking at margin expansion, which is coming through from 54 all the way to 56 odd percent, and we're also seeing a profitability surge from a loss last year into profits this year. In fact, cash profits stand at 83 crore versus the 72 crore number in Q3. So definitely a positive across counts, but currently, of course, in line with the markets, stock has fallen quite sharply, 1% down after almost 4 to 5% up in early trade.
Alright, so that is Lemon Tree for you. That is in focus in today's trading session. Sumit, let's talk about BSC and how is it looking on the charts to you?
Stock is a perfect retest candidate, you can say. So 520 was the level from where it gave a breakout on the first week of May. So retest, and we are getting the follow-up today also. The stock is up by 4 to 5%. So one can keep a stop loss of 505 for the target of 700 plus in the coming 2-3 months.
Keep an eye out on those levels for BSC. Let's move on and talk about Apex Frozen. This one is in focus on the back of its numbers. What we're seeing in terms of revenue growth, that has remained quite muted for the company, just a 1%, 1.4% growth on a year-on-year basis. The operating performance and overall, when you look at the bottom line of the company, that has been something that we are seeing a weakness coming in. Now, the company actually reported a loss this time of 4 crores versus a profit last year of 7.3 crores. Other than that, in terms of the operating performance also, the company saw an EBITDA loss this time versus an EBITDA profit. So yes, this is the main reason, because of the weakness that we're seeing in the operating performance and overall weakness at the bottom line of the company, that the stock is also continuing to see a downfall and down almost 5%. Trade.
Talking about weaknesses in earnings, let's take a look at what Graphite India is doing in trade today, because that one also came out with its numbers yesterday post market hours. If you look at the revenue, it's coming at around 815 crore rupees as against 844 crore rupees a year ago. If you look at the PAT, it's actually come in much lower, 29 crore rupees as against 95 crore rupees on a year-on-year basis. Margins too has seen a contraction on a year-on-year basis, 7.6% versus 10.4%. As you can see, the stock did try and make a comeback in the middle of the day, but from there it fizzled off all of those gains, now trading lower by about 0.7% as we speak.
Okay. Let's move on, and Sumit, SBI Life is the next chart that you're going to talk to us about. What are the indications you're getting in on this one? Should we expect an uptick here?
On the 1st of February, the stock was down by the 10% after the budget news was out related to the industry. So the stock was in the consolidation of that particular candle only. So today, if you see, it has crossed the range and formed the inverted head and shoulders pattern also on the daily time frame. So we are expecting a good upside from here. So one can keep a stop loss of 1170 for the target of 1300. Currently the stock is trading nearby 1230.
All right, moving on, let's talk about SBI Card then, Ashesha. Why is this one in focus today?
America Securities met with the management and some muted commentary has come in from the management of SBI Card. They say that net interest margins could compress in the first quarter of FY24. Credit costs, meanwhile, are likely to remain elevated in first quarter with continued cleanup of vulnerable vintage accounts. They also say that spends outlook continues to remain strong. Travel spends are healthy with overseas spends yet to fully normalize, and they expect this to come through in FY24. They are seeing some moderation as far as fuel, departmental stores and grocery spends are concerned, especially after a 2000 note withdrawal that was done by the Reserve Bank of India recently. They say that they focus on maintaining and improving retail spends market share, but muted commentary with respect to credit costs, with respect to net interest margin compression in the first quarter of FY24, and that is what the stock is reacting to. It has recovered from the lowest point of the day, but despite that, it is sitting with a cut of nearly 0.8%.
Okay, let's move on to the next one. And Harsh, KRBL too will focus on the back of its numbers.
Well, yes, and absolutely beaten, Vinny. What we can see is that revenue, while it's gone up and gone up in a quite a healthy fashion, it's gone up to 1280 crore from the 990 crore mark. So a solid nearly 30% uptick on a year-on-year basis. You're seeing profits as well as EBITDA contract. So what we're seeing is net profit has actually come or grown just by 8%. So nowhere in proportion to that growth in the top line, and therefore what we're seeing is a lot of margin erosion coming through, on the back of which the stock is in fact down and out in trade, down 9%.
All right, that is KRBL, that is actually moving on back of weak earnings. But Sumeet, what are the technical charts flagging some more bearish downside coming in for this one?
We would like to advise the two views from here. One is the short and one is the for the long-term players. So today the stock is almost down by the 10% and still looks weak. So more downfall expecting. Now if anybody is holding for the longer term view, so keep a stop loss of 330. That was the level which gave the breakout 2 months prior on the weekly time frame. So if any time it is recovering and try to sustaining above the levels of 430, then we are expecting much more higher levels for the 550 and 640. But if anybody is holding for the short term, so exit at the current market price, as it can fall 10% more from here.
Okay, keep an eye out on those levels for KRBL. Let's move on, talk about RHI Magnesita. This one too in focus on the back of its numbers. When you look at it, the revenue, yes, that saw a growth of around 47.64%, coming in at 874 crores. But in terms of the bottom line of the company, that was a bit weak because the company reported a loss this time of 678 crores versus a profit of 99.8 crores. There is a one-off that has come in over here as well. That is because of the impairment of goodwill of 661 crores. But other than that, also when you look at just the line items of the profit and loss account, what is also there is that there's other higher expenses which is also there, which has seen an increase, and it's come in at 196 crores versus 83 crores. So almost doubling in terms of those other expenses as well, which is also a reason why the company has reported a loss apart from the impairment of goodwill as well. So yes, other than that, obviously when you look at it and coming down through the operating performance also, that has also been weak, and EBITDA is at 48 crores versus 139 crores, which is down 65%, and margins obviously clear weakness there. 5.49% is what the margin has come in at versus 23.5% last year. So clearly weakness is seen in the stock as well after operating performance has been weak for the company.
All right, moving on, let's talk about Fortis Health. And Sumit, how is Fortis Health looking to you on the charts? Because in between we did see some pickup in the pace or momentum of the stock price, but now where do you see it headed?
Yeah, you can say it has made a double top and fall from the 295 levels to 275 levels in last 4 to 5 sessions. So we are expecting more downfall below the levels of 268. Currently it is trading nearby the 275 levels. So if anytime it is breaking the 268 levels, we are expecting more downfall till 250 levels. So if any retail player is holding, so we would just advise to exit below the 268 levels. So it's been said that to save money is to earn money. So it is better to exit if the stock looks weak.
Moving on, let's talk about another stock in from the healthcare space, and that is Astrazeneca Pharma. That one, if you look at the stock at one point in time, was trading higher by about 6%, now holding on to gains about 3.5%, 5.5% or so. The stock, when it actually climbed over 6%, it reached a near 5-month high level. The company reported a 58% year-on-year rise in their standalone core profit, which stood at around 559.8 crore rupees. Also, the core profit margin expanded to about 21% versus 16.36% a year ago. If you look at the revenue for the company, it was higher by about 23%, while PAT fell by about 38% on a year-on-year basis. The decline in PAT was due to an exceptional item. Not just that, the company also declared a final dividend of 16 rupees per share. So on back of all of these factors, good set of numbers, dividend, you can see the stock that's trading higher by about 5% as we speak.
Okay, let's move on and talk about CDSL on the charts then, Sumit. And this one, obviously, it's seen a bit of a recovery coming in the last 1 month after not doing anything for almost a year or so. What is the indication on the charts? Is it the right time to enter the stock finally?
In September 22, the stock has made the high of 1450 and fell almost 40% from its high. So the stock is bounced from the 900 level. And in the last 3 months, it was almost facing the resistance near the 1020 level. But in today's session, it is able to sustain above the levels, and we are waiting for the closing basis only. So if the stock is closing above the 1020, then we are expecting good momentum till the levels of 1200. Entering fresh, one can keep a stop loss of 960 here.
That's the take coming in on CDSL. On that note, we'll actually slip into a break on this edition of Market Fatafat. But here's my colleague Anurag Shah, who caught up with New India Assurance CMD to talk about the trends in the insurance industry and what's the other commentary coming in from the management. Listen in.
Investment market indices were very favorable, so the performance in the investment income has been good. Further, there was a huge impact on due to the wage revision. You know, from August 17, there was a revision in the wages, and that has resulted in an outgo of nearly 3,400 odd crores. So we took a decision to use the investment market, which was doing extremely well at that point of time, and that is why you see a huge growth in our investment income.
And you said you will be focusing on health and motor. So pricing in some terms of reinsurance pricing, you're getting proper pricing in these two segments because we have seen a surge in reinsurance pricing in these two segments.
Yeah, in these two segments, it's not just in India, but globally the prices, reinsurance prices have gone up, and it has impacted the overall pricing which is offered in India also. But when it comes to giving the, looking at the segment growth, we also need to see just not the pricing. We also have to, profitability is it's a dynamic process. It's a function of not just pricing, but also the claims. So we are also focusing on improving our claims settlement, improving our parameters for expediting claims, ensuring the claims are settled in line with the policy terms and conditions correctly and efficiently.
From 1st of April, as per new IRDA rules, single limit EOM has been implemented. So how New India will get impacted from this? It will be beneficial because there are many companies, they are fearful of these new EOM rules.
So first of all, the new EOM rules have been introduced along with a lot of new improvements in the industry, insurance industry, for which we are very thankful to IRDA for taking these steps, which really, particularly EOM, it brings a level playing field as far as the PSUs are concerned. And it does open up a lot of doors for us to grow in the right lines of business, to attract the right kind of business. And it prevents unwarranted practices also in the industry.